All right, what's up, everybody? Good morning, good morning, good morning. Just wanted to make sure that we started off our trade week the correct way. Let me get that out the way. But what's good, everybody? Good morning. Hopefully, everybody had a great weekend. Let me actually make sure that you guys can hear me. Joetta, what's good? Good morning. I appreciate you being on. Let me make sure that you guys can, in fact, hear me. All right, what's up, everybody? Good morning, good morning. Perfect. Good morning. You guys can, in fact, hear me. Okay. Well, what's good, everybody? So again, I just want to make sure that we're jumping onto a trade session or just obviously looking at the markets together and really understanding what's going to be profitable this week, really understand, break down some good charts and really help you guys understand how to trade. So yeah, let me just make sure that you guys are with me. All right, we got some people on so far. Again, Joetta, thank you for being on this morning. As you see, I'm trying to make the quality and the production a little bit better for you guys. I got the webcam going for you all as well. Just try to make this a little bit more, I would say, interactive with everybody. So yeah, if you guys have any questions, feel free to let me know. I'll definitely make sure that I answer them. If there's any charts that you guys want me to take a look at as well, I'll also go and take a look at some charts for you guys specifically. I will start looking at some things that I want to look at, break down, excuse me, break down a lot of break down some markets I think that might have some great opportunities as far as trades are concerned, and then really go from there. And let me see what you guys. LA, what's good, LA? I appreciate you being on as well. For everybody that's on right now, I appreciate you all for being on the session. So what I'm actually going to do is I was breaking down GBPUSD before we were on, but I do want to go over gold. One of the markets that I personally like to trade the most. It's very volatile. Always has great opportunities. If it's ranging, the range plays for a really long time. And when it's trending, the trends are very easy to identify and also really catch great opportunities as far as entries are concerned to continue with the market trend. Excuse me. I'm getting a little sick right now, so mind me real quick. How about NAS 100? Actually, yeah, we can take a look at NAS 100 before I take a look at gold real quick. I appreciate that, Joetta. So let's go ahead and take a look at NAS 100 really fast before we do anything. Buy kill zone. Oh, this is a previous. Okay, so let me actually go ahead and delete everything. Excuse me. So when I'm looking at a market, the first thing I always want to do, and I'm pretty sure if everybody's been on a call with me before, a session with me before, the most common thing I do is I always make sure that I jump onto a higher time frame. That's really important because jumping onto a higher time frame is going to give you the overall idea of what the market is doing, right? So for me, being on the daily is great. Being on the weekly, the monthly, you could do those as well. But I mean, on any time frame that we look at being from the daily and beyond, we can see that right now we're very much in a bearish market on NAS 100. And I'm pretty sure on all indices, because if NAS 100 is moving this way, US30 is moving this way, DAX is moving this way, GER30 is moving this way. So those things are going to be moving in tandem. So we can currently see that right now this market is very much bearish. So if I can see that this market is very much bearish, more along the lines of looking for strong potential sells, I'm going to look on the smaller time frame to find finer detail to kind of confirm that. So right now, I can see right now that we're very much bearish. And if I'm looking at anything on the daily, I don't have to scale to the weekly or scale onto a higher time frame and mark that up. I don't need to understand the weekly or monthly highs and lows. The only thing that I really want to understand is this market going to continue to be bearish, and where is it going to be bearish to? I can currently see that. I mean, if we did want to draw this up, I mean, that's really not even an accurate trend line because there's not more than two touches. In order for a trend line to be accurate, it has to have 3 touches. I would not consider, multiple candles hitting this as 3 touches, right? Because what I can see right now is this is still part of one segment. This is still part of just like one move. So I can't consider that more than 2 touches to confirm this as a trend line. So we're actually going to delete that, and we're going to use this as our structure actually, right? Because if we look left to understand where we are, we can see that right now we're very much at a level of resistance, or was at a level of resistance. Now, if we scale down to the daily, you can kind of see this a little bit easier, right? You can see that range right there, that being the high, and we can see how it reacted off of there, and we can see the bearish move starting. Now, the one thing we have to understand even from this time frame is confluence at this level of structure. So what I'm looking at right now is obviously this being a level of resistance, but there has to be something that has happened there to confirm the idea that this is going to sell from this point. And we can see that we had a double top. So that double top at a level of structure is telling us that overall the market should continue to be bearish. Now we're going to look at this as if we don't have the current market right there. We can see very much that that is a double top. The market has respected this point once and it rejected, but came right back to that level of resistance to kind of ask itself, am I going to continue to be bearish, or am I going to continue to be bullish? Should I break above this point, or should I respect it and continue to be bearish? And it made that confirmation as soon as it broke below this point. And as soon as it broke below that area, and we just play this so that way you guys can see that. As soon as it broke below that level of structure, right? In case anybody doesn't know, a double top, when you have that level of structure being respected, as soon as it's respected, you get that initial retracement, this is market structure. This is where the market should not break below because it's very much in a bullish market. It can't make a new lower low or lower high. It should continue making higher highs and higher lows, but we didn't get that. The market decided to actually go ahead, come back to that level of structure and say, you know what, the grass isn't greener on this side, and it continued to break and push much lower. And how you confirm this as a true double top and a continued sell is not just the break of that level of structure, but also the retest of it. So if the market does come back to that level of structure and then retest and continues to sell, the overall census and bias for that market should be a continued sell, and the overall trend is bearish. So if I go ahead and look at this, we can see that that market not only was broken below. If I actually just draw this up as a zone really quick, I'll get rid of these highs here. If we go ahead and play that, where did it come back to? Came right back to that level of structure and started to continue to break much lower. So we can actually cheat a little bit because we know where the market exactly respected. So we're going to make our structure right here. And you can see as soon as it broke below, we had that retest. So let me go ahead and write that. So break below, and then we have our retest. So that retest is important because it's showing us that not only did it break below that level of structure, it's respecting it and does not have any want or any need to break above and wants to continue to break much lower. Now, if we want to use further tools for confluence and for just the sake of education, not only can you identify this level of structure as a retest point, you can obviously go ahead and use other tools such as your fibs. So if we go from swing high to swing low, and I'll go ahead and do this really quick. You can see how it came back to this level of structure and respected a fib zone. So you can see it actually, not the 50, but you can see right there at the 61.8. It did break above that 50% a little bit, but it actually wanted to respect that 61.8. And now this is one thing I also want everybody to understand. The question I always get, and I see a very cool little pattern about the 618. Everyone always asks, when you use a fib ratio, or the fib tool rather, should you only be looking at the 61.8 as for your entries? And I don't think that's the right way of going about it. Each fib ratio is very important and should be used when you have confluence put together. Confluence being you have a level of structure in the mix. Confluence being that you have a trend line or your candlesticks. There has to be other forms of signals, if you will. The market leaves clues behind. Pick those clues up and identify those at levels of structure, also mixed with your other confluences, right? So the 61.8 is not the only ratio, but in this case, we can see that the 61.8 was in fact the fib ratio that we should use or have used for those entries. But as it respected that point, you can see it broke much lower. Now, I know you guys are probably like, well, why are you going over what happened or before? That's not making any sense. The reason being is because we have to understand the overall idea. We can't just say or feel comfortable, right? Saying, well, this is a sell. We have to make sure that it is. And we can clearly see the more that we break it down, it is. So let me delete everything. And when we scale down to, well, actually we can stay on this time frame, right? Because you can see right here that it also broke below this level of structure. We're still on the daily, right? We're breaking this down completely so that way we have an overall idea and census of what this market is going to do. So you can even see here on the daily, again, a strong time frame giving us the overall idea of what the market's going to be doing for a long term. We're going to say, again, break below. That break below structure is telling me that sellers are still very much in this market and are going to most likely bring this down. And we can see, or actually not, that's not the break, that's the break right there. So the break below that level of structure, and also wicks. Wicks equal rejection. So what that means is when we broke below that level of structure, you can see how the market or buyers tried buying this market to not break below and come right back to continue bullish. And it did not. It tried breaking above. And as you see here, that wick is the history of buyers. And you can see how it broke or continued to break below that level of structure. It closed there. So that's telling me that buyers tried, but sellers prevailed. So that means that this is going to most likely continue to be bearish. And we already broke below and retested that level of structure as well. So when we scale down to a smaller time frame, let me actually just delete everything, we can see even further in just greater detail, right? We'll be able to identify what the market's going to be doing and identify entries in greater detail. So if you see here, this is a previous level of structure. Now that's the entire zone. I'm taking account of even this wick here. So I know I always get the question of how do you draw your zones up? I don't have a specific way of drawing my zones. I'm just identifying exactly where price has been as far as a zone is concerned. And sometimes zones could be like that big. I don't draw my zones that big. But at this point, we can see right here, if I take account into the low of that wick, that would be considered an entire zone. And you can see here, we did have a break, wrong tool, a break and a retest of that zone. And you can see how it's kind of like choppy around that area, but nonetheless, it did respect that area of structure more than once. You can even see here, it's created its own structure. And you can see that sellers are still taking over. So overall, I know you guys are like, what are you saying? The overall idea of NAS 100 is very much bearish, right? Because in order to understand a full market or to understand a market in general, you have to break it down in that sense. I know it kind of seems like a lot, but again, in order to know what the market is truly doing, you have to go from a higher time frame, get the detail, understand the overall trend, and then break it down on a smaller time frame. Now, being on the 1 hour time frame, we can see that we're now in a ranging market, which is great because it now offers you an opportunity for an entry. That's the entire reason. I know everybody's like, well, what are you saying with NAS 100? The overall idea is very much bearish. We have to understand that. Now that we're getting more detail on the smaller time frame, we can understand a very strong entry point because we can see that right now we're in a ranging market. Rightfully so, because it's Monday. So being on a Monday morning, you're not going to get strong volatility or that many moves, which is great because it now gives us the opportunity to break down a chart, find our entry opportunities, and then wait for the market to reach those points to execute. So what we can do is understand it like this. This is a ranging market. That is the biased here on the smaller time frame, which is important, right? Because these smaller time frames are going to be our entry time frames. Now, in case anybody's wondering, like, what time frame do I enter off of? I don't enter based off of a time frame. I enter based off of my analysis. Now, I will scale down at times to a smaller time frame to see if there's any forms of confluence, such as, double tops or candlestick patterns or any other market patterns or clues that the market will leave behind. But in this sense, the only thing that I'm really going to look at is this being our sell kill zone. And this will be for long-term sells, right? This isn't just going to be if the market does this and comes back, right? I'm not going to just look at this for a sell from that point to here. I want to see that break as well. Because in a ranging market, in a directional, or let me put it this way, a ranging market on a smaller time frame will always continue in the overall direction, meaning that on the daily, the weekly, we can see that it's overall bearish. Now, we can see that bearish trend on each time frame, but on the 1 hour, we can see it's not trending, right? It's ranging. It's not consolidated, but it has this, it's trading off the support and resistance, going off the highs and the lows. Now, in order for that to continue, a level needs to be broken. I think that with this ranging market, as soon as we reach this point, it'll break or sell from here and break below. So in my honest opinion, I do think that NAS 100 will continue to sell. If you're going to do anything, allow it to actually reach this point again. Let me just delete this. So where is this cool little tool? There we go. So allow it to do this. Reach that low. It'll probably consolidate and then reach back to those highs. When it reaches back to these highs, then you look for your potential sells, right? Now that will be your take profit 1. TP1. If that is broken, obviously you allow the market to continue, or you don't even have to necessarily put a take profit. I always put a stop loss when I'm trading. I never take put a take profit necessarily. Once I'm in profits, I'll take my stop loss and put it to at least break even or a little bit in profits and allow that market to continue. Excuse me. And if I have to, I'll close manually for the most part. But this will be the general area where if the market doesn't seem like it's going to break through, that's a level of structure that I will look to take profits from. And if broken, let the trade continue. So if this level of structure is broken, you will allow that market to continue to break down much lower, making more profits. So yeah, NAS 100. Let me just make sure. Euro JPY broke structure. I'm looking to retest to continue to sell. What's good, Kyle? So you're looking at Euro JPY, it broke structure. I'm looking to retest and continue to sell. Okay, so let's take a look at Euro JPY as well. Oh, that completely broke structure. So actually, the majority of all yen pairs should be continuing to be very bearish. So where'd my markup go? Oh, I think it was on GJ. My bad. I thought I had a full markup on Euro JPY. I think it was on another yen pair. So it's not going to be the same trend line, but it's very identical. So you can see here with this initial trend line, I'm on the higher time frame, being on the daily, right? Because again, I want to understand the overall census, the overall idea of what a market is doing, the trend. Because once you know the direction of the market, 50% of your work is done, right? Because you're not going to have to go on a smaller time frame and be like, is this buying? Is this selling? What should I be doing? You know the higher probability idea is very much in the sells. So you're going to identify where to sell from. You're not going to have to go into mark up too much or try to understand anything crazy. You're going to say, well, I see that this market is selling. Where is it going to sell from again? So we're going to identify that right now. So this trend line here, this was not the market. I got to see which market it was. I think it was GJ. But this initial trend line here being respected 3 times, you can see here being the base, secondary, trigger, right? That third touch is your trigger. That's when you're going to look to execute a potential trade or identify a move within the market that's going to go, in the direction of the current trend. So you can see here with that third touch and the respect not only of the trend line, but the structure here as well. If you look left to get right, you can see that. Now, if you're like, but there's breaks above, there's multiple levels of structure. I mean, if I was to break this chart down with just support and resistance, there'll be thousands of levels, honestly, from each time frame. But I'm identifying the most relevant, where the market has made a actual move from. So you can see here what's highlighted. You can see sells happen from here. You can see that sells happen from here. Even though this was broken above a little bit, it did in fact did break back lower, respect that level of structure, and actually continue to these lows here, right? And we came right back to that level of structure. We have further confluence being not just the level of structure, but that trend line. So that trend line being the trigger is also showing me that sellers are very much in the market. And just like my man Kyle said, it did in fact break structure. So if I just delete everything, so that way we can understand this on this time frame, right? Each time frame does have its own markup. That's why I don't have a lot on my chart. Half the time, everybody's like, why is your charts pretty much, not really marked up? It's because I'll mark up on the higher time frame and then understand what's going on there. And then on the smaller time frames, I'm understanding where I want to enter from. I'm getting finer detail. So the finer detail right here is, again, looking left to get right. And I might have to replay this real quick. So let's do this. this was a level of structure. I'm doing this so that way everyone understands the way or why I think of my structure, why I place my structure in this way, and why I identify these as relevant price points. So you can see here, this was a level of resistance. Now, if I press play, let me actually just speed this up a little bit. You can see how not only was it respected, because you can see the break or the respect and the continued push lower, it was broken above and then retested. That's important, right? Because that's telling me that, okay, this price point is not just relevant because it was a level of resistance, it was broken out of, which is a form of action, right? Because you can't just break a level of structure with something weak. It has to be something strong. We did, in fact, have a strong push above. So with that strong break above and that retest of structure here, being that the retest, you can see how it started to push and become more bullish. Now, as the market continues, it couldn't continue to be more bullish, and you can see how it made that level of resistance. And if you're confused, let me know. I just want to make sure that I'm breaking this down in full detail, so that way you all understand how to approach and attack a chart. So that way you could actually become profitable. That's really important. So you can see how as soon as this level of structure here was respected, what happened? It came right back down to this same level of structure. It identified that, okay, well, previously this was important. It's going to be important even today. So it respected that point until it wasn't, right? You can see how it was respected, and then just like how it was respected here and broken above, this was respected and broken below. You can see how this level of structure is now being not respected, and sellers are now taking over. So a very simple approach on this. We're not going to overcomplicate any of our trading. I will delete this level, that resistance. I'll bring this right here just for the sake of having a clean chart. But you can see here, since we have a break below, I'll just put break of structure, BOS, right? So if we have that level of structure being broken, we wait for a retest. Now, I will do a trick with you guys because, excuse me, I do want to see if we can actually identify a buy leading into the sell. So we get two trades, we get a double up. So I'll actually go over a little trick that I like to use with you guys in case anybody wants to do this as well with me. So we can see right now we do have that break of structure, and we are waiting for an initial retest, but it doesn't mean that we can't that we have to wait for this and that's it. There are some actions that we can in fact take. So since we do have a break of that level of structure, we do have a continued bearish market. Let's actually draw a potential trend line for the future. I'm actually going to draw that trend line. I'll draw that right there. So the reason why I'm drawing my trend line there is because we have respect there being the second touch, and we also have respect with that candle, and you can kind of see how it took a little bit of time for the market to respect, but it did in fact push lower. So this trend line could in fact be respected in the near future, being something like this. Let's say we have that, right? Let's say the market, comes back to that level of structure and also respects that trend line. We have another entry there, right? So it gives us further confluence and confidence in our trade, so that way we can go ahead and execute. But right now, we can see that this is very much selling. We can see Euro JPY selling to, I would at least think bare minimum would be this level of structure here, which we're very much at. So we're on the 4-hour candle, so 4-hour time frame rather. We have about 30 minutes for this candle to close, which is great, right? So actually, we might have a trade leading into this session. Thank you for bringing me onto I keep saying GJ. Thank you for bringing me onto Euro JPY, so that way everybody can possibly get a trade on this. And if I don't place it on the session here with you guys, I'll be sure to actually send that to you guys in the Discord as well as a signal. And that goes for everybody, not just legacy students. So that way everybody could profit off of this. So right now, this could be considered a PRZ. Not a PRZ, because this is not going to reverse. I don't want you guys thinking this is going to be like a full-fledged reversal to the upside. I always call levels of structure PRZs if I think that is going to go against a trend. That's just how I think about it, because, I think that after a strong seller's market, a strong impulse like this, we're going to get some strong buys. So I consider that kind of a PRZ, but I won't word it like that, so that way you guys think that it's a full-fledged reversal and it's going to be a strong buy forever. So this is going to be a buy zone, buy kill zone. And the reason why this is a buy kill zone, again, is because this level of structure is currently being met after, this is the most important thing, I'm trying to make this a little bit smaller, after a strong impulsive move. So this is something very important that I want you guys to take with you. After a strong impulsive move, like how you guys see right here with Euro JPY from those highs to this low, not always, but the majority of the time after a strong move like that, and you reach a significant level of structure or support, resistance, supply and demand, however you want to call it, there's going to be, not always, but you can expect the majority of the time, a correction. Very simple, right? This is very much, I do think, going to continue to sell. I think Euro JPY and the majority of all yen pairs will continue to push lower, but when, right? Because we can see that move has already been made. When's the next move going to be made? I do think around that level of structure. But again, can we identify a buy leading into that sell zone? We definitely can. So after this strong impulsive move, I do think, especially when we scale down to a smaller time frame, we can identify if this level of structure will be respected for that buy. So what we can do is, and I'll just mark it up like this, allow candles to show us buys. I clearly can't spell because that does not look like allow candles. There we go. Allow candles to show us buys. And the reason being is because we can't just say, oh, level of structure, time to buy. Absolutely not. We can see how very bearish and very impulsive this is, how strong the yen is against, at this point right now, looking at Euro JPY against the euro. So we can't just immediately start looking for buys. What we can do is allow the candles to show us, okay, well, are they leaving wicks behind? Because if they are, that's showing us a level of rejection. Are we getting any type of bullish variance showing that buyers are trying to at least take over for that meantime? So right now, I would think that if we give it a little bit of time, Euro JPY allowing to give us the confirmations needed, I would start looking from buys into this point to our sells. So I know it's a lot. You guys are probably like, what do we do? You do nothing yet, right? Because there are no confirmations as far, obviously, for no sells, but obviously for no buys as well. We're kind of like in that neutral factor. If anybody's wondering, if anybody's a new trader saying, why can't we sell right now? It's because you never want to sell at a low point, right? You never want to buy at a high point either, but you never want to just say that, okay, well, it's selling, let me go ahead and sell while it's doing that. Absolutely not. Because what could end up happening is that market decides it doesn't want to sell anymore, and it does give you that correction, and then you lost a trade when you could have actually won. So I would allow this market, and we're kind of getting that idea currently as the market is kind of forming and developing here on the 4 hour, and we can see even here on the 1 hour, it's kind of showing us that rejection. We have to allow these candles to close to get further confirmation. But we're starting to see that right now it's not giving us that strong bearish momentum as it was giving us previously. So at least at this point, I would think of this as a buy kill zone leading into our sells. So let me just draw it up like this, and I'll share this in the Discord with you guys as well. So sell kill zone, and just for the sake of, let me get rid of a few things so that way nobody's confused. Oop, I don't know why that wasn't deleted. And I'll just write some notes so that way everybody is understanding. So we are looking for buys, and I'll put in parentheses correction. We are looking for buys leading into our sell zone, right? That's really important because we're not just necessarily looking for buys and that's it. We're trying to capitalize on multiple opportunities. We're trying to identify where this market is obviously going to find its initial correction, or where that sell is tired, right? Where the market's like, you know what? I'm done selling right now. Let me go ahead, take a break. Let me find my next selling opportunity. We can buy into that correction. That's called a counter trend trade. So me being able to identify this being a counter trend trade, if we can, find more confirmations, I definitely want to look for some buys here. Let me make sure. Joetta, thank you, no problem. Just want to make sure that I'm answering everything in detail. So yeah, we're looking for buys leading into our sell zone. So that's for Euro JPY. I will make sure that when I'm not identifying signals, but when I'm identifying some potential trades rather, I'll make sure that I give this as a signal for you guys, because this is something that we looked at together. So I want to make sure everybody's able to capitalize on any opportunity that this gives. So yeah, Euro JPY, with that strong push to the downside, I would expect this market to actually find a correction. Let me actually do one more thing. Something that I personally like to do is with the level of structure, especially with a strong impulse like this is a little trick that I like to do. And this is your Fibonacci extension tool. So what the extension tool does with your Fibonacci extension tool is going to identify where an impulse is done, right? Same way that a Fibonacci retracement tool finds you where the correction or the retracement. So if we go from these swing highs here to those swing lows, the 618 here is showing us where the correction is over with and the new move is going to be made. The same thing is to be said with our Fibonacci extension tool. It's going to identify where this impulse, this extension is over with. So if I go ahead and use from swing high to swing low here and bring it right back up to those swing highs, we can see that we're getting some further confluence. So not only is Euro JPY going to or leading into our level of structure, so we'll actually mark it there because we're going to cheat a little bit. We can see this, the 1618 extension is the more relevant level of fib in this equation, if you will, because it's actually meeting our level of structure. And also you can see that the 127, the 141 being violated. It's already been broken. So the next level that we should be expecting is at 618. This will be our buy kill zone for Euro JPY. So if we can identify not just the level of structure being respected, excuse me, but that 618 extension also being respected is important. And we start finding candlestick patterns, right? More bullish variance leading into the idea that buyers are at least taking over into that correction. We can start looking for buys from Euro JPY from there. So this is what eventually everything would look like. 50, or I'll put a 40 pip stop loss on that. That'll be your take profit. So about 200 something pips, which is a great trade. You know what I mean? This is why we're looking at two opportunities. Let's say that take profit is met and we can start seeing sells develop. You will then go ahead and double up. So that's basically what we're looking at here with Euro JPY. I know that sounds like a lot, but I just want to break this down in a manner that makes sense, in full detail. And also quick, so that way I don't keep you guys too long on one chart. But yeah, I appreciate you guys. For everybody that's on right now as well, thank you guys for being on. I appreciate every last one of you guys. If you have any questions, by all means, feel free to let me know. I am taking a look at the chat, so that way I will be able to answer any and all questions that you guys have. My biggest thing is I want to make sure that I am educating and teaching everybody how to become profitable when in Forex. So ask whatever you need. Or whatever you want. Let me know what charts you want to take a look at as well. I'll make sure that I go in full detail. That's sick. I never knew that. For the and what's good, Braxton? Yeah, I mean that's just a very simple tactic. I mean, I used to use that idea a lot, and I don't actually know why I haven't used it as often recently. I think I just kind of like strayed off into my own little strategy that I have, but it's a very strong tool to use. I mean, you're identifying exactly when an impulse is over with, right? So if we go from these swing highs to the swing lows, again, right back up, you can see that a fib ratio is being met at a level of structure, right? That's important. I think what a lot of people don't realize is when it comes to trading in any market, whether it's EFT stocks, binary options, binary options could be a little bit different, I would say. But you know, futures, options, anything in that manner, everything really revolves around price and the actions that proceed within them. That's why it's called price action trading. You're identifying the most relevant level of price, and then you have to identify the actions that proceed within them, being what other forms of confluences are within that level of price. What tools can you use to identify that that price is in fact relevant? So we can see here when we use our tools, the 618 fib extension ratio being not respected yet, but within that level of structure, That's one form of confluence, right? Or two, because we have structure, we have the extension ratio. What would be another form of confluence? Another form of confluence would be the candlesticks that, develop in that area. When they start showing us bullish variance, bullish engulfing candles, dojis, anything in that nature, showing us that, sellers are no longer in the market, they're very weak, and buyers are now going to take over. That's when everything starts making sense, and that's when we can start looking for a potential entry. So for Euro JPY, I'll make sure that I break this down a little bit easier. I'll make sure that it looks a lot cleaner for you guys for the Discord, but I'll share the analysis, my idea in the Discord to make sure that everybody is understanding a little bit better, and that way you guys can profit as well. Let me see. All right, so looks like no questions, but yeah, let me see if you guys, real quick, because we got a bunch of people on right now. Make sure that you guys are using this time wisely. I don't think a lot of people are out here just giving you guys free sauce, free game and answering any questions. So make sure that you guys are using your time, or make sure you're using your time wisely. Ask whatever questions you want. Let me know what markets you guys want to take a look at, and I'll make sure that I got you guys. But yeah, since I don't got anything so far, let me go ahead and take a look at gold really quick. Okay. So still very much bullish. I mean, it's very hard for us to sit back and say that this market is not going to continue to be bullish. I was looking at strong sells previously, but what we can identify is a few things. So let me get rid of everything. So we can, again, being on the higher time frame is the most important thing. We always want to make sure we understand the overall idea, the overall trend, the overall senses of what's initially going on. So yes, this is very much bullish overall. If we go from these lows to these highs, right? Oh, tools don't want to work. There we go. So we can see from those lows to these highs, very much bullish, and we can see that we had an initial correction, like any market would. After a strong move, we can see strong move. Tools don't want to work. There we go. Strong moves, and we can see that initial correction. So after that correction, what do you think is going to happen? It's probably going to continue to be bullish, right? It's probably going to continue to want to buy, especially off a significant level of structure, as you can see right here. I wouldn't say too significant, but you can see it was something that did play out very relevant for this market to continue up to the upside. What's also important that we understand is not just that level of structure, but also the idea that the structure is important, but there was patterns or other forms of confluences within that area. What is that? That double bottom. So if I go ahead and take a look at this real quick, and the reason why I want to take a look at gold is because I wanted to see if there was going to be a trade for us that we could take live, but it broke to the upside a little bit more, so I can't look for any buys. But what we can see is, again, that double bottom, and I'll explain the reasoning on why I was looking for the sells, leading into some potential buys, which we're probably still going to get. We just have to allow this market to really show us. We don't have those confirmations yet. But you can see here we do, in fact, have a double bottom. So with this market giving us a double bottom at a level of structure, right? So level of structure is made, double bottom has been presented, and we can see how the market has broken above market structure here. Again, in case anybody wasn't here with me before, we looked at a double top, but a double bottom works the same exact way. When you have a level of structure being support, and the market is reaching that level of support, you do initially get a correction for the market to then break lower, to give you a lower low and a lower high. What a double bottom is when the market does not respect that, or does in fact respect that low, and then it tries, or not just tries to buy, but it gives you like a little bit of a rejection from that area, because sometimes you do get something like this and it continues to break much lower. But the reason why this will be considered a double bottom is because we in fact break above this price point here, this being market structure. So once we break above that point, your double bottom is now confirmed, and saying that buyers are still very much within the market and you should continue in that direction. Now, what I was looking for was a potential move, at least back down, a sell, to retest that level of structure that was broken. But I don't have that sell just yet, right? So when we go back to gold, we can see that exact notion. We can see how it broke above this level of structure here, that being a level of what should be resistance is no longer resistance, and we can see a break clear above. So what I'm looking for is at least a push to that down, or to that level of structure here, for our next potential buys. When we scale down to smaller time frames, what I was looking at was this actually. I'll replay this. We were starting to see some rejection with our candles here, wicks, right? So I wanted to see on a smaller time frame if we were going to start to find some potential sells from this price point, at least back down to here. We obviously, if we press play, don't have that. Did in fact break right above. So what I will be doing is scaling to a smaller time frame, and I'll be looking for, if it hasn't already, kind of did, look for a retest at that price point, right? Because this is very much bullish. I don't think this is going to sell at any point. So my honest opinion, I would at least look for this as our buy entry. Buy kill zone. So I'm just marking this up because I do want to find, I was looking for a potential trade on this, and I did want to see if we could place that live. I wanted to see if we can sell this. Obviously, right now we can't do that. The market is broken above. So what we can do is change our bias, make sure that we're looking at this as, like, again, the overall market. You can't just say, well, I'm only looking for sells. What happens if that sell doesn't happen? You have to be able to change your bias, change your game plan a little bit, adapt. So what I will be doing is allowing that to come back, reach this level of structure, and look for some potential buys. And that's just to make sure that I wanted to make sure if there was a trade on this that we were going to place it. But yeah, no trade on that. Let me see what you guys have for me in the chat. Can we go back to your GU analysis? Absolutely. Euro NZD is looking really nice, currently still rejecting and looking to sell. I'll definitely take a look at that as well. And good morning, Jay. What time frame are you on? So if you ever want to take a look at what time frame I'm on, you can actually just go ahead and take a look at the top left-hand corner if you see my cursor right up here, and you'll always be able to see it highlighted. I forgot exactly how to add the time frames back on this, to be honest. I'll do that. I'll make sure that I go ahead into my settings and add the time frame and the market that I'm on right back here in the left hand corner. But I'll make sure that during this session I'll let you know exactly what time frame I'm on as I transition. So let me go ahead and take a look at GBPUSD. I cannot spell today. GBPUSD. Let me go ahead, delete everything. Oh, that has reached exactly where I had wanted it. So I was going to delete everything really quick, but literally my markup was, I think I actually was looking at this previous. Yeah, no, I was. Okay. I was like, did this reach where my level of structure or price point before or after I marked this up and saw this? But no, I think I did this right before I was on with you guys. So, I mean, very easy to see. It's very much a buy. I don't think, especially with gold being a buy, we're not going to go against the idea and trend of what gold is giving us. But yeah, this is very much a strong buy. Now, let me actually delete everything. Oh, wait, maybe this wasn't what I was looking at, because in fact, we can actually see a break of an initial trend line there. So make sure this is perfect. I always get on my legacy students for marking their charts up. They'll like message me their charts, ask me if it's okay. And the first thing I'm like, make sure that everything's connected, make sure everything's accurate. So I'll heed my own advice and make sure that I'm marking this up with full detail. So we can see that trend line there being very important. Again, this being the base, this the secondary, this the trigger, that third touch of the trend line, giving you the idea of a potential trade. And boy, would that have been a trade. You can see exactly at that third touch of the trend line, it sold off pretty heavily. But what we are looking at is the break of that trend line. Break of trend line, I cannot spell, which equals buyers taking over. Right? Buyers are now taking over the market because we have broken a bearish trend line and we are now becoming bullish. Now, let me just delete a few things so that way nobody is confused. With that bullish or that bearish trend line broken rather, and that bullish move being made, we can see that we also broke a level of previous structure. That break of structure has now been retested. That retest of broken structure is also being confirmed as being respected already because we have about 9 minutes left for this candle to close. And look at this candle. Wicks equal rejection. Just keep it very simple, right? Wicks do in fact equal rejection. So me being able to identify that being the break of structure, the respect of structure, the idea that, or the break of trend line as well, and the break of structure, break of trend line, the impulse move to the upside, and the respect of the current structure, and also the candlesticks that are leaving the clues behind. I can identify that this is probably going to continue to buy. right? Just very simple. And then when we break down to a smaller time frame, let me delete everything really quick. We can currently see that this right here is our structure point. Now, if everybody's like, Jay, the gap, I understand that there's a gap there. That's normal. That's what happens on every Sunday. Gaps do not always have to close, right? Or be filled, rather. They can, in fact, stay and remain just like that, not fill to the downside, or completely, rather, because it didn't reach the actual gap fill, at least to that point. But I honestly do think that we will see GU continue to be bullish, especially with the idea that gold is going to continue to be bullish. If anybody doesn't understand that correlation, anytime that gold is buying, that means that the US dollar, is decreasing in value. So when we're looking at pairs like GU or EU, those things will continue to buy because the dollar is weak. Now, when we have gold selling, that means that the US dollar, is in fact strong or gaining value. So what we'll do is end up going to GU or EU and any other cross pair and start buying with the initial dollar. In this case, we would look to sell. I don't think that's the case. I do think that right now, with the idea that very much, I mean, we can clearly see, even just at least on a small time frame, this market is very much bullish. So we're going to continue in that fashion, and we're going to do this. Buy, kill zone. So I would like to identify a potential buy at this area if, in fact, we do reach that point again and get confirmations. This would be take profits 1. Obviously, no trade is made on this, so please don't go and start buying this, label this as your take profits. There's no confirmations on this as of yet. If you're like, but it's buying right now, that doesn't necessarily mean it's going to continue to buy. Next thing you know, this shit just fails to the downside and drops a million pips. You always want to wait for confirmations. You always want to make sure that you're identifying like the clues that the market is leaving behind. So that way you can really make sure you're getting an accurate trade. So I do think that GU will continue to buy. And we'll take a look at Euro NZD here in a second as well. And we see, Jay, without a crystal ball, is there any way to identify a fake out is about to burst instead of a real breakout? Some early indication of some sort? Nope. There is absolutely no way to identify if it's a fake out. The only way you're going to be able to identify if it's a fake out is if a head and shoulders pattern is made. So we'll go over that real quick. So when you're looking at a fake out, right? So, or a head and shoulders pattern rather, the head of the pattern is the fake out. Now you're probably like, but I want to know before all of that. I understand, but there's no way. But you can understand a fake out if there's a head and shoulders pattern, right? Because the head of the pattern is in fact considered a fake out. But you won't be able to understand any of that unless the actual pattern is fully developed and made. So there's no way that you're going to be able to say, oh, that's a fake out. Unless you're using, there's really nothing you can use. Candlesticks, maybe, like that's probably the only thing that I would think that would probably give you an early indication of something's going to fake out, being that, let's say you have a level of structure here, and let's say you have a candle that does this, and next thing you know, it looks like a breakout, but then it comes and breaks below, leaving a wick. But that itself is something just called patience, right? Just allow the market to develop, right? You shouldn't be looking like if the market's doing this and you're looking for a sell and you're like, oh, it's going to sell. You're already wrong. Allow that market to show you and confirm that, oh, it tried breaking above. I was looking at this as a sell because we're at a level of resistance. It was trying to buy above, but it couldn't. It closed below that level of structure. Then you can start saying, well, that was the fake out. Let me go ahead and start selling from here, right? Because what I know you guys are probably fucking trying to do is sell from the wick high, place a standard with a fucking $25 account. And I'm not saying that to sound disrespectful. I'm saying that from experience. You know what I mean? When I first learned how to, or not even learned, because at the time I didn't know what the fuck I was doing. But when I first started trading and I was in the process of learning, that's exactly what I was doing. I wanted to know exactly where the highs and lows were, so that way I could get a perfect fucking wick entry, place a standard on a $25 account, go ahead and make, you know what I mean, flip that account. No, that's not how that works. And if anybody's wondering, you can't place a standard on that low account. Yes, you can. When you have leverage of 1 in 3,000, thank you, fxglory.com. In case anybody wants to go ahead and take a look and fact check that, go ahead and do that. The spreads suck though, so if you're trying to scalp, do not. But FX Glory, that's the broker that I was trying to do that with. That's what I'm saying. Like, there's no way of identifying when a fake out is going to happen. It has to have already happened in order for you to identify a fake out. That's exactly why it's called a fake out. What it's trying to do is say, well, that level of structure is broken. Let me go ahead and start placing my buys all around here because I'm a breakout trader. Next thing you know, that shit just collapses and now all your buys are no longer relevant. So there's no way, unfortunately, to identify a breakout or a fake out rather. By the way, unrelated to the question, CAD CHF is at its lowest since 2009. Maybe a great opportunity to go long soon. ... You tell me. You know what I mean? And this is not to sound rude or disrespectful. This is to build everyone's confidence. If you can call a spade, call it a fucking spade. Right? If you can see that it's at its lowest since 2009 and it's, you know, looking like a nice buy, okay, execute. Make yourself confident with your trade style, with what you're trying to identify. Because once I'm off this session, I'm gone. You're not going to be able to talk to me. Well, I'm lying. You guys are always hit me up. I'm always talking to you guys. But you guys are, like, I'm not trading for you guys. I'm not going to be in the charts with you guys. I'm not going to be educating. I'm not going to be directing. So you have to be able to make those decisions on your own. So if you can see that it's at a low from 2009 and you can see a long opportunity, go ahead. Execute. Be confident. That's the biggest hurdle I think all of us have to overcome. Well, I kind of overcame that in a sense because now I'm over here placing some stupid ass trades with some stupid ass lot sizes. But I think that like even on a psychological level of risk, there's always that idea of, you know what I mean? Like, do I want to be confident and place a standard, or should I do this and should I do that? You have to be able to build that over time. So if you do see a potential trade, place it. You know what I mean? Call a spade a spade. That's important. So let me go ahead and take a look at Euro NZD. Oh, I was actually looking at this. So we are looking at actually a nice little level of structure. And okay. So I see what you guys were saying as far as the potential sells that are commencing. It's kind of hard when I look at overall though. It is very much in a bullish market. I would at least want to see this buy to that point. If it doesn't reach that point, then I really wouldn't look for any sells as of yet, to be completely honest. And that's just because on like my discipline of trading, I always want to make sure that I'm identifying moves at a significant level of structure. I don't necessarily see that as of yet. I do think what you guys are looking at is important though, that head and shoulders pattern, that being the left shoulder, that being the head, that being the right shoulder. Let me move my mic out the way. It's like literally in the way of everything I'm trying to do here. So I can see that was the neckline. The neckline has been broken and respected. This being everything right here, so that way you guys can understand. That being the neckline being broken and also respected right there. And the sells, I can't see what you guys are looking at. So if you guys are looking at a sell, what you would be looking at is this being your sell kill zone. Let me make this a little bit smaller. So that sell kill zone being important. Because I mean it already has been respected, but there is a potential idea that it can come back and respect it and continue to push much lower. But I think, especially with how this candle just closed, I might actually get a little risky and place. I'm not going to do it yet, so nobody go buy it yet. But I might actually get risky and buy from that point, have a 35 pip stop loss and a 61 pip take profit. Where my phone at? That's right. I might actually go ahead and play. I mean, it's already kind of buying from this point actually. Let's see, because I do think that again with a strong break or push to the downside, respecting the level of structure, that being an impulse, we're looking for an initial correction. That could be your sell kill zone. So if you were looking at that on Euro NZD for an opportunity, yeah, absolutely, I could definitely see that. And let me go, so let me actually just, and after I do this, I'll take a look at CAD CHF just to see what my man was saying. So that being, again, a level of structure. And real quick, the reason why I'm looking at this level of structure to cause this correction is because look at this candle. In case anybody is unfamiliar, where is, oh, there it is. I was like, where is my thing? Wicks equal rejection. I cannot spell today, apparently. Wicks equal rejection. And we'll put that right there. So anytime I'm looking at a level of structure, I have to find confluence. One of the main confluences I'm looking at is candlestick patterns or candlestick development. And you can see here that candlestick was trying to sell and could not finish as a sell. We can see buyers started to take over, and as soon as it closed, the current open candle that opened right after is currently looking like a potential bullish candle, telling us that the corrections may in fact be starting from this point. So again, if you are looking for sells, those sells will commence from here, but I would actually probably start to want to identify some buys from this area, at least to this point here. So yeah, Euro NZD, if you're looking for those sells from that point, good job. So let me take a look at CAD CHF. And you said since 2009, so I'm going to go on a higher top. I wouldn't be looking for buys. So nah, hell no. Let me see this real quick. I'm going to the monthly. I'm on the monthly time frame. Is that the lowest it's? Oh, okay. That's the lowest it's ever been. Okay. So now that I got a little bit more idea of that, I don't think that this is going to be a good time to buy, right? Because this is what I mean about understanding the overall market, understanding the candles as well. Does that look like a buy to you? No. You know what I mean? Like, it does not look like a buy whatsoever. I think that what you're trying to identify is a continued sell. Because when we go, I'm on the monthly time frame. Let me see what this is on the weekly. Same thing. And let me see what it is on the daily. Same thing. Same thing. Now, I can't really see too much over here, but I mean, what I'm looking at, so we'll go on to the daily and then we'll go on to the higher time frames to show you exactly what I mean. What's important to understand is, again, the overall direction of what the market is giving you. What is the overall direction? If we go from these highs, actually, I'll go on to the monthly. So from these highs to these lows, you can see it's very much bearish. You can see that. So you don't want to go against that. I mean, if we just look at the overall market, that bitch bearish. That bitch she been bearish since she been open. You know what I mean? She was like, oh, word, CAD CHF, sell, 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 sell. So you're not going to go against that as of right now. It's not just going to magically start buying the day that we wanted to start buying, unfortunately. I wish it was that case. But what's important, again, I'll go from the smaller time frame so you can see it like entirely. The first thing we want to identify is what the market is currently doing. Has it broken a level of structure? Yes, it has. It has broken a strong level of support. That break is already important. Now, if you're like, but can we buy into that point? Possibly, if the market gives us that idea. But we're looking at the overall market standpoint and what's going to happen. Not potentially, what's going to happen. Because history repeats itself. And we can see right now, history is telling us this bitch going to sell. So, even though, and I'll draw a line here because I know that we are, in fact, at the market lows, this being a level of structure, so we need that to kind of be broken in a sense as well. But not really, because I think everything kind of has been broken. So when we scale to the weekly, if we look left to get right, that's been broken, right? We can see how the candles, the wicks here rather, or the body of the candles rather, I'm sorry, I'm over here looking at wicks on this side, bodies, I'm confused myself real quick. You can see even right here that we did in fact have a break below this level of structure, right? If we draw this entire zone up, this being the body of the candle showing that the price could not break below that point, and this the same thing right here, the body of the candles could not break below the price of that point, or that price point. So we can see that we already have an initial break below those levels of structure. Even though this in fact is the lows of 2009 or whenever it was, I would think that this is probably the low, in the sense that the market tried to break below that point or close to that point, but couldn't. In fact, right now, we were in fact able to break and close right below a price point that was never able to be broken below before. So I would in fact think, and again on the monthly, you can see that a little bit easier. Again, understanding the development of candlesticks or the characteristics of them. What kind of candlestick you think this is? Bearish engulfing, a strong one at that. Right, and it's the weekly time frame or the monthly time frame at that. I'm sorry, and it's only the 13th, so we're almost halfway into the month. That's a lot of volatility in a strong already break below level of structure. So I would think that, excuse me, I would think that CAD CHF is really not a buy because the strongest point of that structure that should have been held and would give you the confirmation for the buys would be at this price point here. And that's clearly broken. So I wouldn't be looking at CAD CHF as strong buys, not yet at least. If we do get some form of respect where it's currently at, this the actual like very peak low of that of this market, then I would start looking for buys if the market can confirm that. But I really don't see that happening right now. So CAD CHF, I would not be looking for buys as of yet. I will let that market develop a little bit before doing anything. So yeah, let me see what else you guys got. Great stuff, Kyle. I appreciate that. Thank you. Yeah, any other questions you guys got? Any other markets you guys have for me? Feel free to let me know. I'll definitely make sure that I answer any and all questions. If not, we'll conclude for today because I actually got to make sure I'm answering students. I also got to make sure that our auto trader is running smoothly for us. Manage and micromanage everything, answer my students and make sure they're good as well. But yeah, any questions you guys got, feel free to let me know. AUD USD. I mean, the same thing with GU, right? It's going to probably be buying. With the majority of all U.S. cross pairs, I mean, I think what we're going to be looking at is buys across the board as far as like against the dollar. So AU, we already have respect that level of structure. We have already broken above that range. We have respect that level of structure, that ranging market. What used to be a level of resistance is now support, buys. You know what I mean? Now I went from going extremely detailed into a chart into understanding it and breaking it down to its simple, idea. You can get very technical, you can get very complicated when it comes to trading, but I would say it's complicated when I educate you guys. I'm really being very detailed. But when I'm on the charts, I'm like, okay, well, ranging market, range is broken, respect. Okay, cool. I understand. That's it, right? You don't have to go into, you do in a sense. You want to make sure you're very detailed. But what I mean is you don't want your chart looking like this. Levels of structure everywhere. Then you go ahead and you start changing the color because you want, a different color means a different time frame type shit. I mean, it's great stuff if it works, but then you don't want to overcomplicate it. And you have your trend lines all over the place. I always keep it very simple, right? So right now, I see that we're very much in a bearish market, but as of what the market is currently giving us, we can see that this level of structure has been respected. We have broken above a previous low, with a lower high rather, because you can see how this high is lower than this high. And we have respected that. We've broken above and respected that lower high. Now we're creating a different market direction, even being seen here on a smaller time frame already. So yeah, I think that AU and the majority of like GU, EU, those will continue to buy. USD CAD, USD CHF, USD JPY, those will sell. So yeah, AUD USD, I think it will continue to buy. And let me see real quick. Thank you very much. Yeah, absolutely, no problem. Triple bottom. Yes, absolutely. You're actually correct on that, Braxton. Let me go on to, I think on this, it's a lot of bottoms. 1, 2, 3, 4, I would think. 4, quadruple bottom. The reason why I'm saying 4 is because you have one, I actually just draw it up. 1, 2, 3, 4, right? Because what we're looking at is the first initial respect of that price, correction came right back down, correction came right back down, correction came right back down. So triple bottom, not necessarily. A quadruple bottom, absolutely. I don't even know if quadruple bottom is a real thing. I'm just being funny. But yeah, that level of structure nonetheless being respected. So I do think that this will continue to be bullish. Again, since we have a break above that price point here and we have already respected it, I would expect this market to continue to buy. And it's already giving us that idea right now. So yeah, AUD USD, potential buys. Now I would say that if it can't break above this price point, let me get rid of a few things. If it can't break above this price point, you're probably going to look for sells. And this being your second potential area for respect. So between these two levels of structure, if it doesn't break above those points, probably going to look for some sells. But yeah, AUD USD looking like it is going to continue to be a strong buy. Again, breaking above this level of, or that ranging market. After it broke above, came back down to respect that ranging market. And you can see here, it is giving us that strong bullish direction. So yeah, AUD USD buys, GU buys, EU buys, things in that nature. But yeah, any other questions? Anything else you guys got for me? Feel free to let me know. Definitely want to make sure that I'm answering any and all questions for you guys. If not, we'll conclude for today. Again, I just want to make sure that I'm on these sessions really answering any and all questions, really helping you guys progress and become more profitable within your own trading. I think that's very important. I do see a lot of traders like on YouTube and stuff, and they have great stuff, but they're not educating. They're not really teaching. So I want to be that outlet. I want to really make sure that I can help you guys progress into your own trading journey and really help you guys become self-sufficient, actual traders within our sessions. So yeah, any questions you guys got for me, feel free to let me know. If not, I'll conclude for today. If you are not a part of our Discord, go ahead into our description below. Join our Discord. It is absolutely free to be a part of the Discord itself, where I'll be dropping charts, any updates to any lives, and also signals for you guys as well. I do share signals with my students every day. I'll send them maybe like 4 or 5 a day, depending on how the market is. And if there's a trade signal that like 1 or 2 that I can share with you guys, I'll make sure that I do that as well. So be sure that you're a part of our Discord to get any type of profits and any potential signals in the future and any updates as well. Again, I'm going to be adding a lot more value to not just the Discord but to our YouTube here as well. So make sure that you're following very closely so that way you can stay updated. Thanks again, Jay. Yeah, absolutely, no problem. Real quick, if you guys were able to get any value, any education, if you appreciate the time that's spent on these calls, feel free to actually like the video as well. It definitely helps grow the channel. The more that we grow, the more that we actually are able to impact people's lives in a positive manner, the more value obviously I'll be dropping, obviously more time that I'll be spending with you guys on these calls as well. So I really want to make sure that this channel grows through just pure transparency, value, and just real trading. That's the biggest thing for me. So if you guys haven't already, go ahead, please like the video. It's very important that we grow this channel just through value, transparency, and again, just through a lot of consistency. So yeah, I appreciate you guys. Where did you learn how to trade Forex? Exactly where you're on right now, YouTube. That's not a joke. I'm not even fucking lying. This is why I'm on YouTube right now. This is why I kind of transitioned my business into more automation, more providing profits for students. Because I mean, the education that is out there for free online, like literally, if you guys fucking just use Google a little bit, you know what I mean? Like everybody, so what people do is like, I get people randomly hit me up every day. Like they'll ask me a question. I forgot what question I was asked before. What is a VPS? Somebody I had asked me, what is a VPS? I say, copy and paste that directly into Google and that'll be my answer. And they laughed and they were like, you know what I mean? Literally go and Google Forex or educational Forex. There are so many resources on how to educate yourself on trading. It's insane. The reason why I do the YouTube lives right now is because not just those resources are everywhere, but I'm making those resources not just, available, but I'm breaking it down in the sense that'll make, or breaking it down in a manner that'll make more sense to you guys in a much quicker fashion. Because yes, you can get, education online, but does it really help if you're not getting that hands-on, education, that real direction? So for me, it was, all I did was watch a bunch of YouTube videos, a bunch of educators. I forgot who they were. I don't even know if they're even like still trading at this point because they're probably so fucking well off at this point. This is like 9 years ago, you know what I mean? Or 8 years ago rather. So yeah, YouTube. I didn't really I didn't read any books. I didn't have a real mentor. I would say the only real mentor I had was Scott Carney, but he didn't really do much either. He just gave me his books that I didn't really even read and taught me how to, identify some bat patterns and cipher patterns. But besides that, I didn't really have an education as far, or an educator, a mentor, or anybody directly teaching me. It was more along the lines of, just me persistently on YouTube and Google. So hopefully that helps and gives you guys a little bit of motivation to understand that you don't have to be spending thousands of dollars on expensive courses where they're just literally teaching you exactly what I'm going over with you guys every day here on YouTube. That's real talk. I would say that though, and I don't know this individual, I don't get paid, I'm not affiliated by this, but this is actually a really good source. I'm pretty sure a lot of you guys know him. Swaggy, I forgot his Swaggy P, Swaggy. So I think it's Swag. You just look up Swaggy Forex, right? Swaggy Forex. He actually has, if I'm correct, like an hour-long training video of literally what I'm teaching you guys now. Price action, support resistance, trend lines, Fibonacci's, and like everything in that manner he's teaching. So if you guys want, go right after this, Go on to Swag, look up Swaggy Forex. I forgot what his name is. I apologize. It's not, any hatred towards him or no disrespect, rather. I just don't know his full name or what he goes by, rather. But yeah, very good content, very good trader. Amazing work on his end, honestly. And he does have a really good training, like a full breakdown on price action. Everything that I'm going over with you guys here. So people are lazy as fuck. Yeah, people are very lazy. The moment I started saying auto trader, people just thought, oh, so you're going to set it up for me? You're going to put it onto my MT4? I'm like, no. I'm like, you got to do a little bit of work. So yeah, I definitely understand the lazy as fuck part. But I wouldn't say even lazy. I would think it's more along the lines of lack of resources or lack of understanding, right? Because I'm pretty sure a lot of you guys have been trying to learn how to trade for a really long time, and it just became relevant as far as Forex trading is concerned, right? Oh man, I can't even believe I was an IML, I was an educator, and an auto trader and a swipe trader. I was basically everything. I wore multiple hats. And that was in 2015, 14, 15? I forgot exact what year. I think it was 15. And trading wasn't even popular then. So the resources, the education that was out really wasn't there. You know what I mean? So from then to now, the education is it's ridiculous. I mean, if you just look up free Forex education, you will have websites dedicated to free education and real shit too. Not like, I'm going to teach you 2 candlestick patterns and you got to pay for the rest. No, they have real shit. So yeah, just Google Forex or Google and YouTube, everything on Forex, and I guarantee you will find thousands of fucking resources, especially now. It's almost impossible to not get, a resource or education on Forex at this point. If you can't find education on it, God help you. But yeah, hopefully that kind of answers your question in a very professional and personal manner as well. But yeah, hopefully you guys are good. So we'll conclude for today. Again, I just wanted to make sure that I'm educating you guys and really teaching you guys what's needed to become profitable. Again, there's no resource better than the other. If you find something that's going to teach you and give you information, use it. Every last bit of information is valuable. So just literally fucking Google free Forex education and see what pops up. And then again, just so that way you guys have it here. I know I switched the chart, but Swaggy Forex on YouTube. You know what I mean? Again, that's no disrespect to him. I just apparently don't know his full name. But yeah, he has great content. He has I think a full fucking training that people would spend thousands of dollars on, absolutely free on YouTube. You're welcome. You know what I mean? All you gotta do is if you ask yourself this, right? Ask yourself this, and this goes to anybody who suffers from this. How bad do you fucking want it? You know what I mean? And that's real. That's not like some motivational bullshit. Like, how bad do you want it? Do you want to really learn how to trade to change your life? Do you want to trade as a hobby? Because if you treat this as a hobby, you'll get paid like a hobby. But if you treat it as a profession, you'll get paid as a profession. You know what I mean? So it really depends on you. If you really want to learn, you will find a way. Google, YouTube, especially now with all the resources. So again, nobody taught me. I really wanted to fucking learn this. I didn't have an option. I'll be real with you. I didn't have a choice. This was the only option I had after I left the military. I don't have college education. I barely passed high school, just being real. So this was the only thing that I saw that was going to change my life. Being able to trade, be able to educate, be able to make a business out of this. There's a lot of things that you could do with this as soon as you learn. So yeah, how bad do you want it? So Google, YouTube, free resources. Promise you, they're all out there. Me being one of them. I'm on YouTube educating and teaching you guys as much as I possibly can, answering any and all questions, really helping you guys become educated. So even that. But yeah, seems like you guys are good. So we'll conclude for today. I don't see any other questions. Let me just make sure. Okay, yeah, no other questions. So yeah, we'll conclude for today. I appreciate every last one of you guys being on with me today. I will be on again first thing tomorrow morning as well. just so that way we can identify some potential trades in markets. If you're not a part of the Discord, be sure to join the Discord with the link in the description below, so that way you can stay updated with anything. I will also be posting some charts, some breakdowns of some markets as well in the Discord to share my analysis with you all. If there are some signals that I have shared with some students, if I give them like 3 or 4 of them, I'll give you 1 or 2, just so that way you guys are staying profitable alongside us as well. Just so that's my my appreciation towards you guys following the legacy journey. Also being very consistent with the live sessions and helping you guys become profitable as well. So yeah, appreciate you guys. If there's any questions you guys have, feel free to let me know at any given point. If you haven't liked the video already, please do so. Help this channel grow, so that way we can impact other people's lives in a positive manner. So yeah, thank you guys. Have Swaggy C. That's what it is, Swaggy C. Okay, yeah. So look up Swaggy C on Forex, and he'll be able to give you a lot of information as well. Guaranteed. He's really good. Again, I don't know the dude. He has no idea who I am. So me even giving him, giving him any, shout outs, I get no money for that, no referral, nothing. That's just real. That's just real sauce. That's real game, for you guys. So yeah, Swaggy C on YouTube. He has great stuff. And yeah, if you haven't liked this video, already do so. Go like Swaggy's videos as well, so that way, he gets some love, he gets his flowers as well. So yeah, I appreciate every last one of you guys. If there's anything that you guys need, feel free to hit me up at any time. Appreciate every last one of you guys. Legacy students, if you have any questions, hit me up in the Discord. I will be with you guys shortly as well in the Discord to make sure that I'm answering any and all questions. I know I have some messages from you guys as well. So yeah, appreciate you guys. Thank you guys so much. I'll see you guys on the next one. Thanks, guys.